The ghost month is well underway with the PSEI suffering an 8% sell-off so far. Let's look at some key levels for our favorite stocks. My name is Den Slim and welcome to another episode of Monday Market Outlook. The stock market closed to a new low so far this year, tracking quite well the historical movement of the markets during the ghost month. Looking at the charts, the PSEI is on a 4-week losing streak, ending at 6,160, bouncing off support at 6,150. Zooming in on the 2-hour charts, we did anticipate a soft support here at around 6,200 before a dead cat bounce brought the markets back to a lower low. If this continues, our next support level could be at 6,050 because looking back to last year, this was a significant consolidation zone. No? Hopefully, the markets can find buyers at this level. Now, going back to the daily charts, let's take a quick look at past third quarter performances. Of course, we have this brutal sell-off last year, a 17% drop before the markets recovered. In 2021, we had this drop July 7 with a semi-double bottom here on July and August before the markets recovered. Now in 2020, we also suffered a drawdown, right, from here to here around 10% before the markets consolidated and went upwards towards the end of the year. Now, in 2019, I think this, right? So here we have the ghost month going down, and then the year before that, 2018, ghost month here. Ghost month started here in August, right? And then we had the double bottom. Given our current situation, with the markets already down by 8%, could we see further drawbacks in the coming months? Quite possible. But usually, during this time, this presents some good opportunities for us to identify some key levels on our favorite stocks and try to look for some possible entries. Let me share with you my alert levels that may help you pick some potential bargains. So of course, BDO, one of our favorite banking stocks, the entry level that I've identified here is at 135. I usually pick up at these levels, especially when BDO went down to 132 and take profit zone is at 150. BPI not looking so good since it broke its trend line support here. At this point, I think a good entry point would be at the psychological support level at 100 and take profit zone could be at 120. Metrobank, the entry point for me is around 52 and take profit would be around 59. Aboitiz Power, as we mentioned, this could be a potentially good area to enter, especially after their great earnings report. Look to pick up AP shares every time it touches 34.25 and take profit zone would be at around 37.75. Semirara, of course, we mentioned to start accumulating before it declares its dividend in October. And of course, a pullback here could present a good opportunity to enter. DMC, the same scenario here. AC, my entry point here is at 584, right? And the take profit zone is at 642. Now, given the strong downward pressure, I'm assuming that any rallies here would eventually be met with sell demand, especially at the 642 level. Now, SM not looking so good, so I'm holding off on buying SM shares. Maybe if it hits 760, this would be an interesting level for me to set an alert. No? JFC, as mentioned, we buy low, we sell high. Here, we mentioned 260 is a very strong resistance here. And true enough, when it hit 260, it met heavy resistance here. Despite the consolidation here, it still went down. So a good pickup point, again, would be at 212. DNL not looking good here, but the 663 level could be a good pickup point. And again, any rallies here because of this strong downward pressure, any rally could be met with sell demand at the 706 or 741 level. But at this point, that can still represent around 6% gain. And if it hits 741, that's an 11% gain. No? URC not looking good, but I would like to see if I can enter at 108 and a take profit zone at 119. Bloomberry, a nice retrace at 1076. That's my entry point here and a take profit at 12. Apex Mining, a good entry point for me is 250. It even went below that, and a good take profit zone would be at around 290 or 3 pesos. A-REIT, of course, as mentioned, every time it touches 32 pesos, that's a 6.5% yield. I find myself picking up more A-REIT shares every time it hits 32. C-REIT, my entry point here is 251. So every time it goes down 251, go pick up some shares. Ali, of course, a strong rally from 23 pesos. We did mention an entry point here at 23.95. But a retrace here at this level would present a good opportunity for us to enter back into Ali. 27.85 is my entry point. 31.55 would be a good take profit zone. And a stock that showed a great earnings result, GT Cap, is something we could probably start looking at. My entry point for GT Cap would be at 520 and then a take profit zone at 550. Monde is a risky play, but considering that, Monde is a market leader, it's the number one. Lucky Me has a 90% market share, and it's currently at valuations that's so low that it even defies logic, but we have to respect the price action here. It is still low, but could be a risky play. A good entry point would be at 619, but again, a strong downward pressure could mean that rallies here could be met with sell demand at 735. But from 619 to 735, that's a 19% gain. So, very risky play for Monde, but a high risk, high reward play if it does work out. So, those are the stocks that I'm looking for and the entry points that I'm currently monitoring. So, on to the global markets. One of the most anticipated earnings this quarter was Nvidia with a spectacular earnings beat, but unfortunately, this is the case of buy the rumor and sell the news as it wasn't enough to keep the markets up. And aside from Nvidia, the spotlight at the later part of the week was on the annual Jackson Hole Fed meeting. Fed Chair Powell's speech was the highlight, and we didn't really hear anything new at this point. The Fed still thinks that while progress has been made in the fight against inflation, they are a long ways off the inflation target of 2%. Now, looking at the target rate predictions for the Fed, 80% still thinks that there will be a Fed pause in the September 20 Fed meeting. But interestingly, that's down from 89%. The next few months are divided. We see a 46.7% chance of a rate hike in November. That's up from 33% last week. And for December, we also have a 45% chance of a rate hike, up from 29% last week, and even a 39.9% chance of a rate hike this January, which is up from 22.5%. Clearly, the market already knows that there are more rate hikes coming. The killer question here is, when will this happen? So looking at the S&P 500 charts, the S&P 500 ended the week at 4,405, almost hitting our max pain level at 4,430. So far, we've had a couple of weeks where the market has moved along the options put and called walls. 2 weeks ago, maximum pain was at 438. We hit that level. Last week, max pain was at 443, and we almost hit that level. This week, maximum pain is sitting at 4,400. So the S&P 500 may possibly show further weakness here, bounce off to the maximum pain level by the end of the week. Now, if we look at the 2-hour charts, we can see a trend reversal here with a lower low. So this rally here may meet some resistance here at 443. Now, going back to the daily charts and turning on the moving averages, we can see a role reversal here as the 20-day moving averages became resistance after it was breached at the start of August. See? So we see here a possible confluence of support of the 20-day moving average and the 50-day moving averages, and this might move along to 441 or 440 at the end of the week. Taking a look at the options markets at the end of this week, we can see a call wall here at 450, a put wall at 435, and maximum pain sitting at 440. The next critical zone here would probably be around 4,100. You can see a consolidation happening here. Also, if you look at this chart here, right, some would say this is looking like a head and shoulders pattern here. We have the left shoulder, the right shoulder, and the head. Now, usually during a head and shoulders formation here, the height of the head and shoulders formation would coincide with how low the markets can possibly go. So if we go back to the seasonality charts, we could still see further drawdown in the S&P 500 in the next few months. No? So for now, look at your favorite stocks. Make sure they are fundamentally sound stocks and not speculative stocks. Identify potential bottoms where it might be a good idea to pick up some shares, and set your alerts and observe how the price action reacts at this critical level. Wait for more confirmation that the support level will hold before buying in. Aside from that, let's keep monitoring the markets together. Don't forget to like this video if you found the information useful. Please subscribe to the channel for more market updates. And as usual, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.